Investing can be daunting and overwhelming, especially if you're new to it and you don't know where to start. Personal finance and the stock market have been generating more interest and discussion than ever before, which I definitely do think is a good thing overall. But at the same time, we also have a lot of people that are new to it and want to better their personal finances. And when they go to research investment options for themselves, they quickly just become bombarded by a ton of different information from a ton of different sources. Some of that information is good, some of it's bad, and it can be super overwhelming to actually go in and figure out which is which. And a lot of people suffer from anxiety because they don't want to pick something that is actually taking advantage of them. And this dilemma is why I'm so passionate about talking about personal finance, because when you really break it down and look at it, it does not have to be that complicated. So in this video, I'm going to offer some insight into my own investing strategy, including what specific investments I like and why those investments have been good options for me. And I hope you find that this transparency is helpful, and I hope you're also surprised by how simple investing can really be. And if you like this channel, make sure you hit that subscribe button, and if you want to, hit that like button as well. I would really appreciate it. Thanks. And I also want to include the disclaimer that this is not specific investing advice. And I'm not an official certified financial advisor. This video is just going over what I personally like to do with my investments. But it should not be taken as an exact suggestion of what you should do. Again, I'm just someone who's really passionate about personal finance and talking about it, and I like to share my journey. Before you invest in anything, make sure to do your own research, and if you need to, make sure you talk to a certified financial advisor. All right, but enough of that. Let's get into the actual content. So let's break it down. What is my actual philosophy on investing overall? Well, honestly, I feel pretty lucky because I just stumbled into the world of personal finance about 5 years ago when I graduated from college, got my first professional job, and wanted to know what to do with my salary. And this sparked a new fascination with investing, with budgeting, with just taking care of my money and planning properly so that I can live the life I want to. And after years of learning from a lot of different people and a lot of different sources on the topic of investing, I feel like I have a good understanding of investments in general and how it relates specifically to my life and goals. At the end of the day, my philosophy really just comes down to this. I like to keep my investing as simple as possible. Like I already mentioned, I'm not an investment professional. So the best thing that I've done for my portfolio is to acknowledge that and not try to beat the overall market. A lot of the content I see online today is talking about different stocks and what investments are hot and which ones are not. It's talking about options that people are trading. And while that content can definitely be entertaining, no one actually knows what those individual stocks are going to do. And there's evidence to back this up. According to the most recent Spiva report, almost 88% of large cap investment funds fail to outperform the S&P 500 over a 15-year period. And remember, these are professionals managing these funds. That stat is not referring to everyday regular people. So professionals can't even outsmart the S&P 500 or the overall market. Why would I think that I can? So overall, I've adopted the philosophy that instead of trying to outsmart everyone and to beat the market, I'm instead going to keep my investing simple. And I'm going to use easy to understand funds that match the performance of the overall market and the S&P 500 and a couple other indices. And I found through my research that this approach actually usually ends up with people maximizing their investments. We found that most people cannot outperform the market. So by following the market, you're actually going to maximize your returns, or you have the highest likelihood of actually doing that. Well, what are these investments and funds that I like to invest in? Well, let's cover just that. For the rest of this video, I'm going to go over the various types of funds and investments that I personally like to invest in. And stay tuned because it's not just index funds. I do have some crypto, I do have some single stocks, so stay tuned to hear all about it. All right, let's start out with my favorite index funds. Index funds are one of my favorite tools for investing because they're really easy to understand and they typically have fees that are so small they're basically non-existent. But before we go into the why, let's quickly just break down what is an index fund. An index fund is essentially a group of stocks that aim to replicate the performance of a market index. So for example, an S&P 500 index fund is going to track the performance of the S&P 500. And if you're not familiar with the S&P 500, it's basically just comprised of 500 of the largest US publicly traded companies. And there's a bunch of other indexes that track other segments of our economy. You can also find index funds that track the overall US stock market. There's also some that track the international stock market. You can even find index funds and ETFs that will track the performance of real estate. The options are really endless here. So while index funds might seem complicated at first, they're actually really and simple to understand. They're really just investment vehicles that allow you to track a certain segment of the economy. So an industry or a location, If you can think of it, there's probably an index fund out there that tracks it. So now that we've covered what they are, why do I like to invest in index funds? Like I've already said a ton of times, they're super simple and super easy. Overall, I like to invest in the overall US economy. I believe it's going to grow, and they're super cheap index funds that will track exactly that. And by cheap, I mean they have low management fees associated with them. I don't have to mess with going and picking single stocks within the US economy. I don't have to do any math on which specific stocks I think are going to perform well. I just put it in an index fund and it does that work for me. The other super nice thing about index funds is that they have super low management fees. We're not going to dive into the specifics of fees and why you should avoid them for this video, but just know that you should strive to lower your fees as much as possible so they don't eat into your compound interest. And when I say the index funds have low fees, I mean it. They're so low that they're practically non-existent. But of course, all index funds are not built the same, so make sure you check the fees yourself. I'm sure there's index funds out there that have unnecessarily high fees. But if you're buying index funds from firms like Vanguard or Fidelity, typically their funds have fees that are pretty low. So now that we've gone over index funds and ETFs in general, here's a few funds and ETFs that I like to invest in. And the first is VOO, which is an ETF that tracks Vanguard's S&P 500 index fund, which does exactly what it sounds like. It tracks the S&P 500. Like I said, I love the US economy. I believe that the US economy is going to continue to innovate and it's going to continue to grow throughout my lifetime. So this is one of my favorite investments. This ETF has a management fee of only 0.03%. And I'll also add this ETF's historic performance on the screen right here. So let's move on. Let's move to VTI. VTI is an ETF that tracks Vanguard's total market index fund. So instead of just tracking the S&P 500, this one is now tracking the performance of the entire US stock market. Now, because the S&P 500 does consist of the largest US companies, it does also make up the majority of the total market. So by investing in this index fund and tracking the total market, you're still getting a lot of S&P 500 investment, and the performance on the fund isn't going to differ too much from the S&P 500. But the fund is allowing you to diversify because you're now investing in small to mid-sized companies on top of just the 500 biggest. VTI has a management fee of just 0.04%, and I'll post the historical performance right here. All right, the last ETF I'll mention is a bit of a fun one, and it's called VGT. And VGT tracks Vanguard's Information Technology Index Fund. I'm very interested in the technology sector of the US economy, and this is one way I like to invest in it. Stocks like Apple, Microsoft, Nvidia have all been super trendy recently, and the nice thing about this ETF is that it includes all major US tech stocks. This ETF has a management fee of just 0.1%, which is still super low. And again, I'll post the annual performance here. But that's it on specific examples. Just to close out on index funds, they are awesome. And there's so many more out there besides the few that we just talked about. So make sure you do your research. If there's an industry or an area that you're interested in, just research different index funds, and I'm sure there's one that you're looking for. The other thing you might be looking for is the subscribe button. So make sure you hit it. I would really appreciate it, but back to the video. All right, so if you look at index funds and they still make you super overwhelmed, then there's an investment vehicle that makes investing for your retirement even easier. In fact, it'll do all the work for you, and it will rebalance your investments as you get closer to retirement age to make your portfolio less risky. So what is this magic investment? Well, they're called target date retirement funds. A target date retirement fund is a single investment fund that will automatically adjust where your money's invested to become less risky as you approach retirement age. They automatically diversify your investments into various industries in various countries to create a lower risk profile overall. And you don't have to do anything at all. Just by owning this fund, all those changes are already made within the fund for you. We talked about how they diversify your stocks, but the main thing with target date retirement funds is that over time, as you approach retirement age, these funds will actually start converting your stock investments over to bonds, which are typically seen as safer, more reliable investments. And because of that, your portfolio is going to see less variability as you get to retirement or while you're retired. And I invest in these as well. I like to invest in target date retirement funds within my 401k programs because I like having the peace of mind knowing that these investments are already properly diversified and they'll continue to be as I get older. Now that I have a better grasp on personal finance and investing, I've definitely been investing in these a little bit less just because I like to invest in index funds and pick my own index funds. But don't get me wrong, I still use target date retirement funds, and I think they're a great tool for the majority of people. They've really changed the game and have made retirement investing much easier. If you have no interest in managing your own investments, then I think that these could be a great tool for you and will make your life much easier and much less stressful. However, just like with any investment, make sure that you're researching these funds and picking one that's run by a reputable firm. Make sure these funds have a solid track record with solid returns. And again, make sure that the fees are low. You probably want your management fee to be less than 0.5%. But the lower you can get these fees, the better. And between index funds and target date retirement funds, that's the vast majority of my investing portfolio. Again, I don't try to get too fancy. I don't try to think that I'm smarter than everyone else. Overall, my goal is to maximize how much I can earn and then put as much of that into the stock market as possible. So now that we've talked about the majority of my portfolio and kind of what my overall philosophy is, let's talk about a few alternative investments that I also like to make. All right, the riskiest thing I like to invest in is crypto, but hear me out. By crypto, I pretty much just mean Bitcoin. That's the majority of the crypto that I actually buy. Every now and then I'll also invest in Ethereum, but I tend to prefer Bitcoin just because of the overall premise of it. And I want to make something perfectly clear. I am not a crypto expert at all. These are speculative investments that could go to zero at any time. And because of that, Bitcoin and Ethereum make up a super tiny percentage of my overall portfolio. My goal for crypto is never to exceed more than 5% of my overall investments. Now, because Bitcoin and Ethereum have been growing so rapidly over the past few months, I think crypto actually makes up like 7% of my overall investments. But that's not because I'm contributing more than normal. It's just because the performance has outpaced the performance of my stocks. But over time, I'll get things rebalanced and I'll be within that goal. For me, I have enough invested in crypto that if Bitcoin or Ethereum go to the moon, I'm going to see a nice payout from it, but if nothing happens to it or if it tanks and just becomes worthless, it's not an amount of money that's going to keep me up at night. And I think that's the way that you have to go about risky, speculative investments like these. If you want to invest in crypto, you should only put money into it that you're okay with losing. The space is still so new, and while I think that Bitcoin and Ethereum have a lot of potential, we really have no idea what's going to happen. We've never been here before. So go for it, but keep it small compared to the rest of your investing. And I have the same philosophy for buying single stocks. And I've already talked about why I like index funds, but I'll occasionally buy individual stocks for companies that I like. But this is really just for fun. I don't view this as a way to get rich quick or as a way to try to outperform the market. Again, all my key investing is done in index funds and target retirement date funds. But I will buy some stocks every once in a while. The reason why this is risky is that it just puts way too much weight in one company within your portfolio. If you only buy primarily Tesla stock, and then Elon goes out and says something stupid, then your portfolio suffers because of it, and because you were not properly diversified, you took a massive hit. I'm also wary of people buying single stocks because a lot of people think they can outperform the market, and that's just really not the case. People will buy some stocks, they'll outperform the market 1 year, they'll gain a lot of confidence, they'll get a huge ego, and because of that, they think they're investing pros. But you have to remember, this is about beating the market over time. And the stats show that doing this over 15 to 20 years is very, very unlikely. So I have the same rule of thumb with single stocks. If you're gonna buy them, make sure they make up less than 5% of your overall investing portfolio. Stick to those diversified index funds and target date funds for the most part. All right, but that's gonna do it for this video today. Let me know what your thoughts are. Let me know what you think of my investing strategy. Do you like it? Do you think it's too conservative? Do you think it's too risky? Let me know what you think. I want to hear it. Again, if you hit the subscribe button, I would really appreciate it. If you hit the like button, I'd appreciate that as well. And we'll see you in the next one. Thanks.